Minutes past. Okay, let's start. I think we have a good crowd already. Um, Here we go. It's just a very quick introduction of eco-sustainability. All right. So we are in. Oh, I forgot to mention. My name is Keegan. I'm the managing director of Eco Sustainability. We are in 6 countries. We've done quite a number of projects with a strong team of 21 consultants, and we are experts in 17 standards, ranging from reporting, carbon credit to net zero. Here's all our countries. If you're from any of these countries, please let me know. We'd love to talk to you. But if you're also outside from these countries, we would definitely like to talk to you. Either maybe form a potential partnership. Who knows, right? Uh, right. So we do 5 things. Our bread and butter is still sustainability reporting. As you know, sustainability reporting is now mandatory across many countries, and if it's not already mandatory, it will be mandatory very soon. We do consulting mainly to help companies to decarbonize, which is what we're going to be talking today. What is carbon, right? Um, Carbon credits, we just signed a very interesting project this morning, literally 2 hours before, with in Indonesia. We do a lot of training, and also we're very proud of our think tank arm, and I'll tell you more about that. So remember I mentioned 17 standards. If this doesn't mean anything to you, it's okay. Today we're going to be talking about the greenhouse gas protocol. If you see, that's the one second row on the left, second from left. And also ISO 14064 also at the bottom line. These are the two main carbon accounting standards. If you um, don't mind sharing in the chat, if has anyone done carbon accounting before, I'd love to know. Now, this is the most interesting slide. We are very, very proud that we are not just standard users, but we are standards contributors as well. As you know, globally, there are standard setters. These are people who set the standards. You know, everything has a standard, right? You want to build an aeroplane. The standard says you have to have 2 wings. So there are people who write these standards down to how many nails, how many screws do you fit into the aeroplane wings, and then there are standard users, the people who use the standards, such as regulators, yourself. You guys are standard users as well, and then in between these people, there are a bunch of very special people. They're called standards contributors. These are people who contribute to the standards by writing technical commentary to help co-develop. So today, in eco-sustainability, you are learning not from people who just, watch a YouTube video yesterday and today they're training, but our team, we are actually standards contributors. You're really learning from the experts. Yes, this will be recorded. Please keep your microphone on mute. Questions, chat bot, my team will address them. And please, there is no such thing as a silly question. I want to assure you, Sustainability reporting, carbon accounting is very new and it is still being developed. Trust me when I say this because as a GHG protocol contributor myself, I know what's happening out there, and I can tell you things are very, very new. So no such thing as a silly question. All right, let's start from so guys, the topic today is on carbon accounting, right? Okay, before I start, let me tell you, okay, let me put it. All right. Today I will spend only less than 60 minutes to share with you about carbon accounting. It's generally a 5-day course, so it's impossible for me to cram everything. I only have one objective today. I want to give you a lens from which you view carbon accounting. Once you understand that lens, the way to see carbon accounting, my job is done for today, right? Um, Now, let me tell you a story. I see in my I see Dr. Said, Juana, I hope I'm pronouncing your name correctly, and Abdul Kafid. Okay, let's say four of us, okay? We are having dinner, okay, today. And I'm the first to arrive. I order a Coke, okay? It's my first Coke while I'm waiting for all of you. And then Dr. Said comes. So I said, "Hey, Dr. Said, do you want a drink?" And Dr. Said says, you want an orange juice, okay? So I'm gonna order my second Coke. Dr. Said will order his first orange juice, okay? And then Juana and Abdul Kafid arrives, and we start to order our food, right? So, I'm a small eater, so maybe I'll just order a small appetizer. Maybe Dr. Said, you're hungrier, so you're gonna order a pasta. Juana and Abdul Kafid, maybe both of you, you want to share a pizza, right? A pizza has 8 slices. So maybe we want to hang around longer, so we order some appetizers, some maybe French fries, whatever to share, right? Maybe we'll order a jug of a wine or a bottle of something. So my question is, by the end of dinner, how do we split the bill? Do we divide by four? Possible? Yeah. Do we divide by who ordered what? That's also possible. But if you want 100% accuracy, in theory, you can go down to who consumed what. So, for example, Juana and Abdul Kafid, you guys ordered a pizza, but maybe Abdul Kafid, you are hungrier, so you ate like 5 slices. Juana, you ate three. Is it possible to account who ate what and pay for what? Of course, the answer is yes, right? So there are three methods of dividing the bill, right? You can split by four, you can divide by who ate what, or you can go down to, sorry, by who ordered what, and you can go down to who consumed what. So carbon accounting is like that. It is rule-based. In carbon accounting, we don't care about fairness. As long as you follow the rules, no one can argue against you and say it's not fair. Now, if you understand this story, then you'll understand everything I'm going to say in the next, 45 minutes. Now, do you already see the potential problem here? The potential problem here is the accounting and reality, the gap is really big, correct? So if we split by four, it doesn't reflect reality. But it's okay. You can use that. That's your methodology. That's the way you argue, and that's the way you justify. So today we are going to look at the methodology. Um, all right, quick recap. What is carbon? A lot of words here, so I'll explain to you. The Earth is exposed to the space. The space is really, really cold, minus 200, minus 400 degrees, right? So thankfully, the world, nature has a way to keep us warm, and that is the carbon in the air. It's like a blanket. Right now, I've got my aircon on, so I'm a little bit cold, so I'm wearing a jacket. Um, Carbon is the blanket. However, because of human activity, because we drive, because we turn on the aircon, because we do so many things, right? So we humans produce a lot of carbon, and the world is getting warmer and warmer. So imagine now I have one jacket, but imagine I wear another jacket and another jacket and another jacket. It's going to be really, really hot. So carbon, too much carbon is not good. So there are seven types of carbon gases that we calculate in carbon accounting. But of course, in real world, there are hundreds of different types of gases, but there are only seven gases. Why do you think that is so? Why do we care about these seven gases? It is because of this concept called global warming potential. Not all gases cause global warming, but these seven gases are really, really potent. And some of the gases you will know, the mother of all gases, carbon dioxide, but also methane. Man, methane is 28. So if you look at the column on the right, methane is 28 times more potent than carbon dioxide. Nitrous oxide found a lot in composition with interaction with fertilizers, 226 times. So you can imagine the potency of these gases. So the Kyoto Protocol has already identified these seven gases. Sometimes we call it basket of seven. And these, in your carbon accounting, your job is to calculate how much emission your company produces. All right. So globally, there are global missions. Globally, we want to keep the global warming to below 1.5. A lot of scientists have already decided that 1.5 is almost certainly we're gonna fail, sadly. And when we do fail, these are the consequences. I want to zoom in on coral because I'm an avid diver myself. If we hit 1.5, 70 to 90% of the corals will decline. And if we hit 2%, 2 degrees, sorry, 99% will decline. So things are not looking very well for us, but we'll do our job. And all of us here, never forget why you calculate carbon. You calculate carbon because you want to decarbonize, you want to reduce carbon, but you can't reduce if you don't know how much you are emitting. All right. So every time, in case the maths are too complex and you want to give up, don't forget why you're doing this. All right. This is the most pessimistic slide one of the most pessimistic I've ever seen. If you see the pink color uh, part, it says that no climate policy, right? If you don't do anything, eventually we're going to be hit 4%. And if you look at the current policy, that is the orange part, despite all the things that we're doing in the industry, the mandatory disclosure, carbon tax, carbon credits, despite all this, it doesn't look very optimistic as well. So I just want to let you know that your work in carbon accounting is really, really important. All right. So a bit of very quick history lesson. So you guys have definitely heard of the Kyoto Protocol and the Paris Agreement. The Paris Agreement this year is the 11th year anniversary. It is the largest human endeavor. Collectively, humanity came together and said, we are going to save the world. Uh, just to share a bit of a trivia, our co-founder, Dr. Vincent, was actually a co-speaker in Dubai. You might have heard Dubai was the pivotal moment to transition away from fossil fuel. Sadly, 3 years after that, we still haven't done much to transition away. Okay, let's jump straight into carbon accounting. Okay, what on earth is carbon accounting? Now, in this industry, you might have heard people say, oh, sustainability now has the rigor and the vigor of finance. What it means is, gone are the days when we go to the beach, we pick up some rubbish, and we say we saved some turtle from being strangled by plastic. That's good to do. That's good to do. Like, please go and clean up the beach. But today's sustainability is very measurable. There are standards. And one of the things that we do, the cornerstone of reporting, is carbon accounting because we take a climate first approach. So, carbon accounting is the quantitative tracking of greenhouse gases. So, remember, there are seven gases in terms of CO2 equivalent. At the end of the day, it comes out in a chart and it tells you your total emission. All of you would have probably seen this very, very famous chart. Scope 1 is the amount of emission that you emit from yourself, from your own company. For example, if you use steam, if you have a company vehicle, that's scope 1. Scope 2 is your indirect um, emission. That means you pay someone else to emit. So depending on which country you're from, if you're paying an electricity company to burn electricity for you, that's your scope 2. The Why are you paying? Because you pay someone else to burn, say, coal for you, right? Scope 3 is the most complex. These are the categories from upstream to downstream. So we even calculate down to investment, if you can see the one on the right. Even banks, when they give, let's say, you $1 million, they have to account what did you use with the $1 million and how much it admit. Did you build a building? Did you buy a fleet of cars? Did you take the money and do whatever, right? So investments down to the investment as well. All right. The two big standards, ISO 14064 and the GHG Protocol, before this, um, they were separate, but now they're doing a lot of work to be more and more unified. Long time ago, like 3 years ago, when you learn carbon accounting, you have to learn like two different standards. Although they're similar, but technically they're different standards. Um, the GHG protocol, if your country is adopting ISSB, it is also mentioned in the ISSB that the standard that you should be using is the GHG protocol. Okay, how do you start? Now, this is going to be like a 5-day course, with practice and like a lot of problem solving. So today we only have less than 60 minutes, so I'm just going to give you a bird's eye view. Remember what I told you earlier, carbon accounting is at most an estimation, and at the end of the day, it is how you estimate and how you argue and justify the methodology. Now, it is not as subjective as you may think. Although we say it's an estimation, but there are ways to estimation. And the ways to estimate is very narrow. So you can't just do anything you want. It is set in stone, specifically line by line, item by item in the standards. So when in doubt, consult the standards, right? First, you define the boundary. Then you look for the sources of emission, where it's coming from. Is it from your operations? Is it from your electricity? Is it from your cars, your employees? When you fly overseas for meetings, when you stay in a hotel, where are all these sources of emission? You basically account for all the sources. The third step is the quantification or the calculation, the actual calculation. And the fourth is reporting. Now, if anyone has done carbon accounting before, which part is the most difficult? One, two, three, or four? Okay, I'm just taking a pause to see. Real life split it equally. Okay, yeah, that's good. Uh, Abdul Kafid said split it equally. Yes, that's what I do as well. Adrian, but are there ISO platforms SaaS that can verify our platform Carbon IQ Jejakin? I mean to verify our platform calculation. When if I understand your question correctly, you have a platform, a SaaS platform. You want to calculate how much emission your SaaS platform emits, right? Yes. In fact, it is very important to do that because the people who use your SaaS platform um, will need to account that under purchase goods and services. Is scope 4 needed in carbon accounting? Good question. For now, no. It's only one, two, three. Remember, carbon accounting is rule based. So if you follow the rule, which is one, two, three, you're good. Scope 3 is complex. Yes, that's correct. All right. If you ask me, which part is easy, which part is difficult? Step 3 is pretty straightforward. It is A multiplied by B equals C. That's it. That's all there is to carbon accounting. A times B equals C, right? The tough part is step 1 and 2. I'll explain why. All right. Um, Step 1 is the organizational boundary, right? Now, if you have one company, it's really easy. But real world is really complex. What if you're a McDonald's franchise and you have like 2,000 franchisees? How do you calculate? What if you're the franchisor and what if you're the franchisee? Completely different way of calculating. What if your company is owned by another company, 30%? They own it through equity, but they don't control. This is where things become really, really complex, right? Because if you have one company, it's really easy, but in real life, it's complex. Sometimes you have some kind of control over a smaller subsidiary. This is where defining your organization boundary is very important. I won't go into too much detail, but operation control basically means you control it. Let me ask you a question. If you open a shop in a shopping mall, who controls the lights? If you open a shop in a shopping mall, right? So now you can see the complexity of real world. So the problem with us carbon accountants is when we read the standards, it's already really, really complex. But when you really apply it in real life, it's even more complex. Some companies have financial control, as in they own a part of the company, like 30%, but sometimes they don't control the operations. Venture capitalists love to do this. They just own it, but they don't care. Some have uh, equity control. Oh, sorry, that's the VC. Some have financial control. Financial control means you have a say in how the money is used, the budgeting, the expenditure, etc. Okay, the second part, this is the most time consuming part. You have to figure out where it is emitting. Purchase goods and services. Everything that you buy, including a tissue paper, you need to account for it. Your capital goods usually like a machine, for example. Fuel and energy related. Fuel does not refer to the actual fuel that you're using. It refers to the process of making the fuel. For example, let's say uh, electricity. There's a process of producing electricity, right? That's under three. Upstream transportation to bring your products to your company. Waste, business travel that includes flight and hotel, employee commuting, upstream lease assets. Okay, if you look at 8 and 13, what's the difference? If you see a repeat, right? So it's actually not a repeat. Upstream lease, one is you are the landlord, the other one, you are the tenant. All right. Processing of sold goods, use of sold products, down to the usage. Now you may say, that Keegan, how is it even possible? How do I know this data? Like, how would I, if I sell an iPhone, how would I know this? The guy like like and threw away the iPhone, like end of life treatment. How would I know all this? The good news is again, go back to the standards. The standards specifically tell you how to do it. And if you've never read the standards before, you're probably thinking, it's going to be complex, right? I have good news for you. It is not as complex as you may think. It is still complex, but it's not as complex as you may think because the people who write the standards are reasonable people. They are driven by a simple philosophy, and that philosophy is no undue cost or effort. In other words, no one's going to write the standards to a point that you cannot follow. So that's the good news for all of you. No matter how complex you think Scope 3 is, which it is, now, first is the uh, activity itself. Mm, how much did you use? So if you say, I use petrol, so how much petrol did you use, right? If you say, um, for example, if you can't quantify it, what you can do is you can go to finance and look at the purchase. For example, I use 100 liters of petrol, right? I could track it with my receipt, or I can go to finance. If I claim, I can go to finance. That's what we call a spend-based method. So you use money to quantify. That's why I keep saying it's how you argue your case, right? Emission factor is basically per liter of petrol, let's say, how much does it emit per liter, for example? And then the global warming potential is because not everything emits carbon dioxide. A lot of things emit methane. A lot of things emit nitrous oxide. Sometimes they emit three gases, four gases, five gases. So you have to make sure you quantify all the gases, right? All right, for the emission factor, which is how much carbon it emits per unit, you can go to a couple of reputable sources. For example, the IPCC or the US EPA or DEFRA. I have a question. What if your country has its own emission factor? Should you use the global one or should you use the one that your country set? Let's look at the chat. The mall owner. Ah, this was a question I asked, right, about the mall. Okay. So again, it's really hard to real life is complex. Um, the mall owner, yes, you may say that it's the mall owner, but what if you have operation control? Because sometimes each mall will proportionate the usage by the space, right? So it lets you control how much electricity you use within your shop. So if that is the way that is the case, then it is under your operational control. Operational control means you're the one who's deciding if you want to turn off or turn on the lights. Yeah. Again, how you argue it, right? Local better than global. Yes, absolutely. We will come to this. So data tier. Now, as carbon accountants, you're gonna be working a lot with data. A lot of data. You're gonna be best friends with your Excel sheet. So every time you get a piece of data, the question is always, how good is this data? How accurate is it? How valid is it? And how do you verify? That is the most difficult thing. If you want to calculate your electricity and your okay, maybe not operate. Let's say gas. Okay, let's say you open a restaurant. Let's assume you use gas to cook. Okay, you could go to finance and ask, hey, finance, how many cans of gas did we buy? And finance will say 100. But when you go to the operations say, yes, we bought 100, but we did not use 100. We only use 80. 20 is still in our storeroom. Now you see the problem. Finance says 100, operations says 80. Which is the more accurate one? Of course, operations, right? Because just because you bought something doesn't mean you consume it. It goes back to the pizza story, right? Just because two people, who was it? Like Juana bought a pizza doesn't mean I ate the pizza. So why should I pay for the pizza, right? So tier one, tier two, tier three are basically tiers of data. As you progress lower and lower and lower, it is more and more accurate. So tier one is you take like an international number. Tier two, you take a national number, and tier three, you get a product. Okay, what does this mean? Let me give you an example. Suppose I bought a a mug, a cup, okay? What is the carbon emission of this cup? The answer is it depends. Is it, let's say, made in China? So if it's made in China and I'm based in Singapore, the cup has to travel from China to Singapore, right? Shipping emits carbon. So the cup is higher. But if I'm in Singapore and I buy a locally made cup, the emission is much lower because I don't have to transport it from China to Singapore. That's why we always say buy local, right? Because buy local is smaller in terms of emission. Now, if you go to the IPCC, let's say there's a cup emission factor, um, it will use the average, but it does not reflect reality. Okay, so that's why I keep saying accounting and reality are two different things. You need to narrow the gap as much as you can. Okay, GWP values, you have to multiply the GWP value. Remember GWP? We spoke about this. It's the global warming potential, right? So if I'm in an air-conditioned room and I wear a coat, there's a difference between a linen coat and a wool coat. It's still one jacket, but one is a linen, one is a wool coat. So the linen coat is CO2. The wool coat is so much more hotter. That's your other gases. All right. Remember, I mentioned the calculation itself is not difficult. It's basically activity data times emission factor times global warming potential. Now, be very careful because many sources that you refer to, they already multiply the emission factor and the GWP. Okay, so you always have to look at the number. This is the problem with carbon accounting. It is about methodology. It's not like financial accounting where if I move $1 from one bank account to another bank account, it's $1. It is clearly $1. There's no ambiguity. But in carbon accounting, you have to do a lot of thinking. All right. Sometimes they give you in kilogram. You need to convert to ton, right? Because our unit is ton CO2 E, right? What is the meaning of E here? Anyone knows? So remember I mentioned the seven gases, okay? So let's say so we have a lot of people from globally here, okay? So imagine I have uh 200 ringgit, the Malaysian ringgit, 500 Filipino peso, 10,000 Indonesian rupiah, 50,000 Nepali rupee, right? No one's gonna know what that means because we all don't understand currency in that sense. Okay, 7,000 Thai baht. Like what does that mean? How much is that? Unless you're Thai, you may not know how much that is. But if I tell you you have the equivalent of 5 US dollar, you have the equivalent of 50 US dollar, you have the equivalent of 100 US dollar. Now everyone understands, right? Because if we say US dollar, everybody knows the value. So CO2, carbon dioxide, E stands for equivalent. That is the US dollar of the gases, right? All right, in summary, you first remember identify the sources. Before that, you do your boundary. Then you identify the sources, which part of the entire business process you are emitting. You select your calculation approach. Most likely for your baseline, you're probably going to be using activity base. And then you calculate. The calculation itself is not difficult. It's A times B equals C. You can use calculators, carbon accounting softwares. That's possible. Um, a word of caution about software. It's easy for you when you just key in the software, right? But it's very difficult for the auditor. Auditors don't like softwares because they can't go behind the software and challenge the methodology. Or it's not so easy. You have to do more work to reveal the methodology. If it's finance, it's a finance software, then no problem because everybody we all play by the same rule. But for carbon accounting, my rules could be different from your rules. So I need to understand your methodology. That's why softwares, it's good, but use it with caution. And then you roll up the data to the corporate level. If you have a lot of subsidiaries, if you're reporting to your global HQ, you do that. Okay, sorry. This is the preparing the report. It is pretty simple. There's no standardized format, but Excel sheet is probably the most commonly used. If you use the software, you just download the summary. Okay, for third-party verification, today the trend, more and more people want verified calculation. As you already can guess, the gap between carbon accounting and reality is super, super big. So the auditor wants to make sure you do your best to narrow that gap. And today, when a company gets a report, the first question is, how do I know you calculated correctly? Right? Um, how do I know that you followed the standards to the T? So you need a third party person, a company, to verify. We call it a VVB, verification validation body. Um, so moving forward, for your first year itself, I would suggest, if you have not done carbon accounting before, if you're calculating for the first time, I would suggest, strongly suggest, do it with the intention of it being audited. Otherwise, you're going to start wrong. And when you need to audit, you have to recalculate everything again, okay? Because there's an error. And if your error is below 5%, that's okay. But if your error is above 5%, it will trigger a recalculation. So imagine like 3 years from now, you have to go back 3 years ago and recalculate. All right, quality time check. Okay, quality of information. Now, since you know carbon accounting is at the end of the day how you argue, make sure you have quality information. Just the other day, I read a greenhouse gas report. They disclose scope one, they disclose scope two, but you know how they disclose scope three? For every column, they put there confidential, unable to disclose. Confidential, unable to disclose. Confidential, unable to disclose. Every single category in scope three, they are unable to disclose. So this breaks the principle of transparency. At the end of the day, when people read, they need to have useful information. What's the point of reporting if you're going to black out every single line, every single category? Then what do I read it for? What's the point, right? So make sure you are led by the basic principles of like completeness, accuracy, transparency, verifiability. All right, last two slides. Okay, I want to show you a case study from Singtel. Uh, it's a bit wordy, so I'll explain. It says here the Business Times, Singtel's uncomparable emission. In its latest sustainability report, Singtel stated that it cut total Scope 3 emission by 33.5% in the year ended March 2024 to 2.56 million tons of CO2, right? That reduction came after an even larger drop in fiscal 2023 by 52.9%. In just 2 years, Singtel has cut Scope 3 by more than two-thirds. Oh, imagine, huge company cutting by two-thirds. And then, here comes the kicker. Singtel explained that the bulk of reduction came from a greater use of company emission factors, CEF, or product carbon footprint, as opposed to industry average emission factor, IAEF. Okay, what does this mean? It basically means that Singtel moved from one methodology to another. Just by moving the methodology, the reduction is more than two-thirds. In reality, there's no reduction. They just use a different calculation, right? So imagine I want to lose weight. I use the first weighing scale. The first weighing scale says I'm 70 kilo. Just by using another weighing scale, suddenly the weighing scale says I'm 65. On paper, I lost 5 kilo. In real life, I still don't have a six pack. Now you see the problem? Just moving methodology gives you reduction. But that's not true. So in many countries, for example, like Singapore, in the European Union, there are activists, journalists whose literal job is to read your carbon accounting and find fault with your carbon accounting. So make sure you don't fall into this trap of doing your accounting badly, having no justification, and someone comes to you and audits you and find fault with you. All right. Um, it's my last one. Okay. As you know, the larger sustainability reporting standard for many countries is the ISSB. The ISSB specifically, there's two parts of ISSB, S1, S2. S2 is the climate specific disclosure. And in S2, it specifically asks you for your metrics and target. This is where your carbon accounting fits into the overall picture. Time check. Okay, 10 more minutes. Great. Any questions? Okay, Adrian asked that. We need a verified. We need to verify our platform cover as our disclosure. Great. Yeah, Heng Heng has already talked to you. Okay, what are the pathways and certifications to pursue to become a subject matter expert to cater to the needs of the carbon accounting market? That's great. Yeah. So in eco sustainability, we also run a lot of trainings. Heng Heng, could you talk to Darishan on maybe get this person's number. So Darisha, we do run trainings and also certify. You will need to sit for an exam and then be then certified. But I'd say the certification itself is a 3 day, 5 day course. Honestly, the real bulk of the learning is actually to do it. So after you get certified, my strong suggestion is just get a friend or a family who owns a small little cafe, like a small little business, and practice your calculation. Once you practice, that's when you really learn the intricacies. The tough part isn't the theory. The tough part is to apply the theory in real world. Yeah. I'm trying to Anjali asks, I'm trying to understand scope classification under greenhouse gas protocol. If the waste is generated and treated within company-owned land, does it still count as scope 3 or does it ship to scope 1? For example, if a fruit exporting company disposes its organic fruit waste on its own land, allows it to decompose, should the sh how should the resulting emissions be classified? Mm. Okay, so short answer is it is under your scope 3 waste because the waste comes from you. So where you dispose it is immaterial. It is you who is producing the waste. When you produce the waste, methane is involved. So you put it under scope 3. Just a suggestion. If you have if you're a fruit exporting company, now when you dispose waste, it produces methane. So that's your emission, right? Now, here's a tip. How do you reduce that part? All right. I don't know how big the operations are, but there are many ways to turn it into fertilizer. If you're successfully turning it into a fertilizer through some kind of composting bin, you would have reduced your emission down to almost zero. There's still some emission, but you would have successfully reduced it down to zero, almost zero. So that is the next step of disclosure. After you disclose, you know where to work on, and from there, you decarbonize. Yeah. Under GRI, do we need carbon accounting? Yes. The GRI asks for your carbon emission or for carbon auditing. Okay. So audit has not much to do with the standard. It has to do with the regulations. So it depends on who is requesting your sustainability report. Is it the government? Government usually asks you because you are listed or going to be listed, or you may pay carbon tax. So audit is compulsory, or you could be requested by a larger company. Let's say you work for a global company. That global, Apple, Amazon, they are asking you, Khalid, to report to them. That part, for now, um, not a lot of requirement for audit, but eventually they will need audit, like next year or the year after. Yeah. Usually they give you a bit of leeway for your baseline. Generally, they may allow you some leeway if it's not audited, but for your second, third, fourth, for sure. Is carbon reporting mandatory for any sustainable report? Yes, absolutely. Mm, for the Khalid, I forgot which country you're from, but if your country mandates sustainability report from Canada, okay, so for Canada, for sure, report sustainability report is mandatory, and in sustainability report, um, there will be the carbon reporting part or the carbon accounting part. The carbon accounting is very important because reporting takes a climate first approach, which means to say your emission is under climate, right? So for sure, it would be mandatory. But again, the mandatory part comes from the reader, either the government or the requester. Sorry, sometimes I speak a little too fast because I'm mindful of the time that we have. Yeah, thank you, Khalid. Okay, the we for this quarter we have talk, as you know, every Monday, 11 o'clock or 8:30 Singapore time, because we want to make sure we adjust to a global audience. Sometimes morning in Singapore is midnight to you, so we try to mix it up a little bit. Here are the talks. We finished sustainability reporting, greenwashing. So if you see this lady, Teng Lo, actually I'm taking over her. So this is my session today. Introduction to carbon accounting. Next week, oh gosh, next week we have a very exciting topic on CBAM. You almost certainly have heard of this thing. It started 1st January this year. A lot of companies are panicking, those who are exporting into Europe. Um, and then we have sustainability as a business driver. I highly encourage you to come for all this, by Geraldine. And then we have a spotlight for Indonesia. And Hing Hing will talk about Sustainable Reporting 101, focusing on the ISSP, which is the global baseline. We have a special one just for the Philippines, Spotlight. And Henry will talk about the regulatory landscape for Southeast Asia. Teng will talk about business advantage, and Heng Heng will talk about the Malaysia National Sustainable Reporting Framework. Yeah, for now, I hope this is not the end of our relationship. Please talk to my colleagues, Heng Heng and Teng. You in the chat, you would have seen their emails. Okay, so I have still two more questions from Stephen. If the vendor operates generator using diesel in the building, if the vendor operates generator using diesel in the building owner premise, haha, okay. This emission will be considered scope 1, 2, or 3 for the business owner? Good question. It would be scope 3 because it is the vendor who is operating. It is the vendor who has operational control. It is a vendor who decides to switch on and switch off the generator. So it would be the vendor scope 1, but your scope 3. May I know, if a company is trying to establish a sustainability report for the first time, which assessments to prioritize in what order before the company is considered ready to publish for the first time? Is doing carbon accounting scope 3 1 to 3 enough, or is it recommended to have something like the PCF, that's a product carbon footprint, before publishing the report? Fantastic question. Um, if you're doing it for the first time, the ISSB allows you relief from doing many things. You only need to do scope 1 and 2 according to the ISSB because it's the baseline. So you certainly do not need to do the product carbon footprint. Um, so sustainable carbon accounting, there are three types. There is the entity, that means your company. There is the project, like if you do a project. There is the product. So in a report, you only focus on the entity, which is your company. Product is a different standard by itself. So no, you do not need to do that. However, if you have a requester who asks you for your product, then you have to do. Yeah. I know it's not a useful answer. The answer is there anyone who asked for it? Yeah. Y- Yes, please join us for you have the links from Heng Heng in the chat group. Join our WhatsApp. We have a really good community there, and it's easier for us to talk to you if you've got new updates, talks. We're very active. We want to have a long relationship with you, so please join our WhatsApp. Yeah, thank you so much. I'm still here for the next